Hello and welcome to this Tuesday edition of FreightWaves Now. I'm your host Anthony Smith, and coming up we have Luke Falasca back with us, giving us an update for the brokers. We also have Andrew Cox with us, giving us a shipper update. But first, we're going to go to Zach Strickland with Carrier Update, brought to you by PowerFleet. Stay tuned.
Hey everyone, and welcome to your Tuesday Carrier Update presented by PowerFleet. I'm Zach Strickland, and hopefully everybody out there is doing well today on this Tuesday as we continue to monitor the coronavirus outbreak situation and its impact to the freight market and just overall general economy. So, looking at our outbound tender volume index, this is obviously one of my favorite things to look at this period of time because volumes are what's going to drive a lot of the movement in the freight market right now. Capacity is going to react to this volume increase or decrease kind of on a lag, and that's what we've seen. Tender rejection rates a little bit slow to react at first, and then once the volumes kind of hit their inflection point, they jumped up. So outbound tender volume index continues to break records every day as it continues to climb. It did slow down a little bit here over the last couple of days, but we're sitting at 12938, 12,938. Again, another record all-time high, about 29% higher than this time last year. Again, this is basically changing the way that we're going to be able to view the freight market for the foreseeable future. As this number gets higher, shippers need to save a little bit of this freight for the summer, hopefully, but it looks like they're going to spend it all up here in the early part of March, or as we enter April. So overall in the country, outbound tender volume index and individual markets weekly change is what you're looking at right here, this green and red mix here. So you see there's actually a few important markets that are popping up right here in the red. Los Angeles is one we've talked about being, one of these port markets that's important to watch because that's where all the imports happen, as this market kind of leads the rest of the country in terms of inventory. Elizabeth, New Jersey, again, Port of New York, New Jersey sits in that area. So the more of these bigger markets that we're starting to watch, change their dynamic, the volumes are starting to come down a little bit. Ontario slowing down just slightly. Harrisburg, Pennsylvania also slowing its growth a little bit. It was up around 16-17% week over week growth last week. So again, these bigger markets are really what's going to drive a lot of the capacity increases, and they're going to be the leading indicators as we move forward, looking in to see, where is that inflection point? When is capacity going to start returning? When are volumes going to start retracting a little bit here? Because we do expect for us to crest that mountain here in the next couple of weeks. How fast that is, however, is a complete mystery. So looking at our Elizabeth, New Jersey and Harrisburg markets, so this orange line right here is Harrisburg volumes right here, their outbound volume index. You see that they spiked up tremendously here in the last couple of weeks. They're starting to turn down, just like we saw. Their week over week growth is slowing. They look like they have peaked and topped the mountain. They may go back up, they may not. We're not really sure at this point. This is only a single day of information where it's going down, but it is a pretty significant day over day drop. The Elizabeth market never really got too explosive, but it is retracting as we see down there here in the last couple of days. So two of the biggest markets in the United States definitely to watch out here on the West Coast, Los Angeles and Ontario. Again, we kind of treat these as a little bit of a bellwether in terms of retail. A lot of freight coming in from the China. And support a lot of ports of Los Angeles and Long Beach, and then enters in through all those DCs and the warehouse pool out there and comes into the country. Ontario, Los Angeles down here in the Blue Mountain. Ontario still showing some resilience, but again, not as big as it was back here during all the trade war and the pull forward. This is all that inventory that's shipping right now was pulled into these warehouses way back then. So even if we do see lower customs, lower import shipments right now, it may take a little bit more time for us to run out of that inventory, especially as people continue to panic buy. Looking at the United States in terms of just rejections and capacity, you see down there van and reefer rejection rates continue to increase through this early part of the week. Not doing the parabolic increase that we saw last week, but it's definitely still on the rise right now. You can see, even though volumes have kind of moderated, looking at the outbound volume volatility here on this chart, in Atlanta, Harrisburg, Ontario, all the biggest markets in the United States, it's kind of moderated. We're not seeing the greens that we were seeing here a few days ago, but rejections week over week still on the rise. Like I said before, this is that lagging impact of overall volume. So be careful out there and continue to watch us for more. That'll do it for today's Freight Update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Hi, good morning, everyone. I am Luke, bringing you another broker update, and we're going to be diving in deep for some reefer data today. I told you it was coming, and here it is. But first, let's take a look at the overall blue line here. We've seen, see that 12,900 there all the way on the right, nearly at 13,000. That's the overall truckload volume in the United States, another all-time high. We keep saying it. Hopefully at some point shippers will save some freight for the summer, but it is still there. Nearly 30% higher than we are this time last year. You can see where we are over the last year. The orange line is refrigerated volume. So of that nearly 13,000, about 2,200 of it is refrigerated volume. So you're looking, but you can see that massive surge. If we come down here, look at this massive surge in refrigerated volume. We've never seen volumes like that. If you look over here to my right, this time last year we were sitting at almost half of where we are right now. So refrigerated volume has seen an incredible surge, while the overall truckload volume market is up about 25 to 30% year over year. Refrigerated volumes are up about 40% year over year. Now, looking at rejection level, we're going to do the same thing here. So the blue is the overall rejection levels. We're sitting at about 17.6%, which is the highest year over year. We've absolutely pushed through that 13% number that we saw during the New Year's holiday. So we are way up, which means to raise your spot market bids, I'm sure you're doing, as carriers may be giving you a massive premium right now to move freight. Now, refrigerated volume is sitting at about 28.7%. You can see that over here on my right, 28%. That's insanely high. The highest we saw during the holiday peak, we saw about 25, 24%. So we've already surpassed that, and it's happened in about half the time as the overall rejections have increased. You saw right there around March 15th, so only a week ago, rejections for refrigerated volumes have just absolutely gone through the roof. Now, we're going to take a look at some reefer markets here in a second, but first, we've got our call map. Now, this is going to be refrigerated data only. So you're looking at the Reefer Outbound Tender Volume Index weekly change. So the markets in blue are areas where there is an increase in refrigerated truckload volume as of this morning. The markets in red are going to be where there's decreases in refrigerated truckload volume. And the markets in white are fairly unchanged or fairly balanced. Notice all the way down there, in Columbia, South Carolina, you're seeing nearly a 200% weekly increase in refrigerated volume. That is a massive increase. Lakeland, Florida, seeing about a 60% increase. A little bit here in Southern California, Ontario and San Diego areas, seeing a little over 30 to 45% increases. Looks like Portland, Oregon, seeing some increases. Not a lot going up in Seattle and Spokane regions right now. They're actually contracting a bit. But I would focus on the southeast, minus Savannah, but the southeast is looking very strong right now for refrigerated. Tennessee, Georgia, the Carolinas, and then also Lakeland, Florida look very, very good right now. And then also Wisconsin. Wisconsin is seeing massive gains as well. So focus on some of those areas as well as Southern California. We're going to take a look at Ontario. If you see here, the blue line is going to be the outbound volume levels for Ontario. About a 40% increase over the last week and a half for refrigerated volume. And then the orange line is going to be the rejection level, sitting at about 21%. So a little bit below the national average, but a massive increase, and in such a short period of time. Right about the 15th there of March is where we've started to see that increase. So really, really increase your spot market bids going out of Ontario, California for refrigerated freight today. You're going to need it to cover the premium that carriers are asking for. And also, call on Ontario if you don't have customers, and if you do have customers, still call. There's a big increase in refrigerated volume, so make sure you're getting it. I'm Luke, and that'll do it for today's broker update.
Voices from every corner of the supply chain concerning all modes of transportation. From the world's largest logistics podcast network, this is what the Freight Tech Revolution sounds like. Freightcast presented by FreightWaves. Subscribe now wherever you get your podcasts.
Welcome to your Shipper Update. I'm here with Andrew Cox. Andrew, what do you have for us today?
Anthony, we're going to talk a little bit about carriers, but how that impacts shippers, especially with rates moving forward. We actually think that truckload freight might be a little bit more insulated to the downside risks of the lockdowns and the possible recession than we initially thought. Yesterday, Morgan Stanley analyst Ravi Shankar actually released a note that kind of upgraded the entire trucking sector, and he gave a couple reasons why trucking has held up so well thus far. And really, it's about the supply and volume dynamics that are currently happening. So, as both Zach and Luke have mentioned, volumes are through the roof. I mean, we're now 30% above year over year and 16% above the 2018 peak. So volumes are absolutely going bonkers right now. And the same thing with capacity. Because of all these volumes and because some drivers actually have been taken off the road, we see capacity tighter than at any point in 2019 and now nearing kind of the second half of 2018 average.
Gotcha. So there's a few things here, right? And one of the things, first thing that you mentioned, this is going to be one of the essential segments of the economy, right? And this is going to be an area that needs to kind of continue to operate if we're going to get through this anyway smoothly, right?
No, that's exactly right. We have to have the truckers moving. We have to have this freight moving. The shippers must stay open and the truckers must move it. And one of the points that Ravi made yesterday was that trucking actually has a high exposure and disproportionate exposure to consumer staples. He actually estimates that 60% of all truckload demand comes from consumer staples. And while I think that number, it might be a little bit high, the thesis is there that truckload is kind of insulated a little bit from this downside risk because all of the volumes that are coming out that have fallen from restaurants and retails are now just exploding out of stores like Walmart, Costco, and Amazon. So you're just seeing a shift away without kind of a decline in consumption. But basically, you're seeing those truckload volumes hold up.
Right. And another talking point that we've kind of gone over in the past is not always looking at the headlines to decipher what's going on in the trucking industry, right? So a lot of times when we see new GDP numbers, things like that, a lot of people want to correlate that to the trucking side, but this is another example of how the two are very separate. When one is thriving, the other one can be in a downturn. Like much of 2019, rates were low, we saw a lot of capacity, trucking wasn't doing too well, but the economy was ticking along just fine. Vice versa here, we're seeing the trucking industry really kind of surge while the greater economy is kind of faltering at this point.
That's a good point. Seth Holm actually the other day kind of said that typically trucking is a leading indicator, but in this point, trucking is kind of a lagging indicator. But I think even that thesis has kind of gone by the wayside because it's not only a lagging indicator, but it's the only part of the economy that's still running at full capacity, even above capacity, to make up for some of the other points of the economy that are down. And because of that, we're going to see rates. We've already seen rates jump, 20, 25% in some markets, but overall in every market across the country, we're going to see rates jump. This is just our year-over-year change in outbound tender volumes, and then the orange line here will be our DAT spot rates. And as the DAT spot rates is on like a 15, 20-day lag, so it typically does take some time to catch up, but you can see this upturn in rates. We're going to see rates fly up. This is how it kind of pertains to the shippers. The shippers are going to have to continue paying higher rates because there's less capacity, there's more volumes. This changing dynamic is going to push rates up even higher for the foreseeable future.
Truer words have never been spoken. Definitely a change in dynamic. Thank you so much, Andrew, for that shipper update. And thank you so much for tuning in. That's going to do it for this Tuesday edition of FreightWaves Now. But the content doesn't stop here. Andrew and his team always putting out great content, so check out the Passport program. And if you're looking for more media content, check out our FreightWaves TV app, where we're always streaming around the clock on all your favorite streaming platforms, including Apple TV. Thank you so much for tuning in, and we'll see you on the next episode.